What is happening, crypto fam? Welcome back to Bitcoin Bulletin, your ultimate source for the pulse of the digital asset world. The market is absolutely electric right now, a whirlwind of activity that you just cannot afford to miss. We've got major moves, surprising shifts, and critical levels being tested that could redefine the landscape. Get ready, because we're diving headfirst into the most explosive updates you'll hear all week. First up, we're tracking a significant downturn in Bitcoin's price as it dips below a crucial psychological barrier, sending shockwaves through the entire market and triggering massive liquidations. What does this massive sell-off mean for the future? We break it all down. Then, in a surprising twist, Ethereum is not just holding its own. It's actively stealing the spotlight, outperforming its digital counterpart as capital begins a significant rotation. We'll explore the data behind this dramatic shift and what it signals for the path forward. Plus, we're digging into the complex dynamics of Bitcoin's short-to-midterm volatility, examining the intricate dance between market corrections and strategic accumulation opportunities for savvy investors. Is this a chance to buy the dip or a sign of deeper troubles ahead? We've got the analysis you need. And finally, we're getting to the bottom of a colossal $2.6 billion Bitcoin whale move that's shedding serious light on the market's shifting power dynamics. Who made the move, why, and what does it mean for you? Stick around, because you don't want to miss a single second of this. Hit that like button, subscribe if you haven't already, and ring that notification bell so you're always in the loop. Bitcoin's price plunge, a market reset. The cryptocurrency market experienced a significant downturn as Bitcoin fell below the critical $110,000 support level. This drop, the first below this mark since early July, triggered a broader market decline, with the total crypto market cap losing nearly 2% in a single 24-hour period. The sell-off led to substantial liquidations, with over 180,000 traders facing the brunt of the volatility, totaling approximately $833.32 million in liquidations across the market. Bitcoin itself briefly touched $109,300 before showing signs of recovery, trading around $110,329. Trading volume saw a notable increase of 13%, reaching $54.3 billion, indicating heightened activity amidst the price action. Several major cryptocurrencies followed Bitcoin's downward trajectory. Solana saw a decline of 5%, Ethereum dropped by nearly 4%, and Dogecoin experienced a loss of over 4%. Among the hardest hit was FARTCOIN, which plummeted by 13.6%, alongside significant drops from Curve DAO token, Virtual's protocol, and Chainlink. The primary catalyst for Bitcoin's breakdown below $110,000 was identified as a massive sell-off by a whale, an entity holding a large amount of Bitcoin, which unloaded approximately 24,000 BTC, valued at around $2.7 billion. This significant move occurred on Sunday, directly impacting market sentiment. Analysts are closely watching Bitcoin's technical indicators. The price has fallen below its 50-day simple moving average, SMA, which was previously at $116,444 and is now hovering near the $110,000 mark. Immediate resistance is expected at the Fibonacci 0.236 retracement level of $112,350. On the downside, the 200-day SMA at $100,768 is viewed as a critical support level. Should Bitcoin fail to maintain its position above $110,000, projections suggest a potential slide towards $105,000 and possibly $99,000, areas where previous demand zones were observed. Noted economist Peter Schiff has gone as far as to predict a further decline to $75,000, advising investors to consider selling and repurchasing at lower prices. In contrast, Tim Draper remains optimistic, maintaining his $250,000 price target for Bitcoin, and pointed to the healthy inflows into Bitcoin spot ETFs on August 25, which exceeded $219 million, as a sign of ongoing institutional interest. Ethereum, despite its recent 4% dip, is showing resilience, trading within a rising channel pattern at $4,418. The 50-day SMA at $3,836 is acting as dynamic support, with the long-term outlook supported by the 200-day SMA at $2,633. The Relative Strength Index, RSI, at 54.6 suggests that momentum is still healthy, and holding above $3,800 is key for further upward movement towards $4,800. Solana is trading at $187.89, comfortably above its 50-day and 200-day SMAs, with its RSI at 51 indicating neutral momentum. If current trends persist, Solana could target $250, with $170 serving as a strong support level. Greg King, CEO of Rex Financial, has expressed optimism about Solana's potential as a future platform for stablecoins, highlighting its speed and scalability advantages over Ethereum. Hold on tight, the market's volatility is far from over. Now, let's see how Ethereum is making waves and shifting the narrative. Ethereum's rise, capital rotation fuels ETH dominance. The cryptocurrency landscape is witnessing a significant shift in investor sentiment and capital allocation, with Ethereum, ETH, showing remarkable relative strength against Bitcoin, BTC. The ETH-BTC trading pair recently crossed the 0.04 threshold, a level not seen since Bitcoin's own ascent past $100,000 and Ethereum's re-establishment above $4,000. This development is largely attributed to a trend where older Bitcoin wallets are rotating their holdings into Ethereum. Analysts at QCP Group suggest this strategic pivot is driven by Ethereum's expanding utility in decentralized finance, DeFi, and its robust smart contract ecosystem, indicating that long-term holders are increasingly recognizing Ethereum's fundamental growth. This capital rotation is further underscored by contrasting ETF flows. In August, Ethereum-linked ETFs experienced substantial inflows totaling $3.3 billion. This stands in stark opposition to the performance of U.S. Bitcoin ETFs, which recorded net outflows exceeding $1 billion during the same month. The data strongly suggests a broader market repositioning, with investors favoring Ethereum's potential in areas like the tokenization of real-world assets and the growing demand for staking rewards. Some market observers note this as a potential turning point, where Ethereum might be carving out its own independent momentum, breaking free from Bitcoin's direct price influence for the first time in this market cycle. However, the broader market faced a significant headwind due to a massive whale dump of 24,000 BTC, estimated at $2.7 billion. This triggered a sharp correction across the board, leading to a 9% intraday drop for Ethereum, pushing its price down to $4,365. The overall crypto market capitalization also saw a decline, slipping from its peak above $4.1 trillion to $3.75 trillion, with liquidations exceeding $500 million, heavily impacting Ethereum futures. Adding to market uncertainty, Federal Reserve Chair Jerome Powell's recent remarks at the Jackson Hole Symposium tempered expectations for an imminent interest rate cut. The probability of a September rate reduction fell from nearly 87% to 76%, which typically strengthens the U.S. dollar and puts pressure on risk assets like cryptocurrencies. As the market digests these events, key technical levels are under scrutiny. Bitcoin's ability to hold above the $109,000 support level is crucial to avert a deeper correction. For Ethereum, the 50-period exponential moving average, EMA, at $4,511 has become a critical indicator. Prices are currently trading below this level, suggesting a short-term bearish bias until it can reclaim this significant moving average. Looking ahead, the upcoming personal consumption expenditures, PCE, inflation data is expected to be a key catalyst. Analysts suggest that if both Bitcoin and Ethereum can stabilize and regain positive momentum, the recent capital flows into ETH, coupled with potential positive economic data, could pave the way for a retest of prior highs by late September. While Ethereum shines, the intricate dance of Bitcoin's volatility continues. Next, we delve into the strategic implications of these market swings for savvy investors. Navigating Bitcoin's volatility. Accumulation strategies amidst corrections. Bitcoin's market behavior is currently characterized by significant short-to-midterm volatility, presenting both challenges and opportunities for investors. The recent price action has seen Bitcoin decline to levels not experienced in over 6 weeks, falling below the $109,000 mark. This downturn was largely precipitated by a major whale offloading approximately 24,000 BTC, valued at around $2.59 billion, which had been held for over 5 years. This substantial sell-off not only impacted Bitcoin's price, but also signaled a broader trend of capital reallocation, with a notable rotation into Ether, ETH, spot, and futures markets, particularly on decentralized exchanges like Hyperliquid. The sale was executed rapidly over several hours on Sunday evening, causing Bitcoin's price to drop nearly 2.2% within a mere 9 minutes. The asset found a temporary bottom around $112,174 before stabilizing near $109,000 on Monday. This abrupt decline caught many leveraged traders by surprise, leading to the liquidation of $284 million in long positions, according to CoinGlass data. Despite the price drop, Bitcoin futures open interest has reached an all-time high of 762,700 BTC, marking a 13% increase over the preceding 2 weeks. This elevated open interest suggests persistent trader engagement with leveraged positions, although a further breach of the $110,000 level could trigger further cascading liquidations. Sentiment in the options market reflects a growing bearish outlook. Put options are currently commanding a 10% premium over call options for the 30-day delta skew, indicating a pronounced fear of additional downside. This sentiment is amplified by Bitcoin's significant price drop of $6,050 over just 2 days. The Bitcoin futures premium has stabilized at a neutral 8%, a slight increase from 6% the previous week, signaling a lack of widespread bullish conviction despite recent record highs achieved in late August. On-chain data from Glassnode reveals a shifting distribution pattern among Bitcoin holders. All wallet cohorts appear to be in a sell mode currently. The 10-100 BTC cohort has shown the most active distribution, while the 100-1,000 BTC group appears divided around the $105,000 level, which could act as a potential support zone. Conversely, smaller holders, specifically those with 0.1 BTC and 110 BTC, have demonstrated accumulation behavior, particularly after Bitcoin's price dipped below $107,000. This suggests that while short-term traders might be exiting positions, long-term investors could be viewing the current price levels as opportune moments for accumulation. In contrast to Bitcoin's mixed signals, Ethereum has attracted significant demand. The same whale that offloaded Bitcoin has been observed closing Ether long positions and actively acquiring spot ETH, signaling strong confidence in Ethereum's future performance. Data from LookInChain indicates that this whale secured $33 million in profit from a $450 million ETH long position, while retaining a substantial stake in the asset. Although Ethereum's price also experienced a dip from its record high of $4,954 to below $4,400, it has outperformed Bitcoin over the past month, with a nearly 25% price increase compared to Bitcoin's 5.3% decline. As the market navigates these complex dynamics, a colossal whale move is making headlines. Next, we unpack the details of a $2.6 billion Bitcoin whale transaction and its market implications. Whale's 2.6B Bitcoin move sparks market rotation and shifting power dynamics. A significant event has sent ripples through the cryptocurrency market as a major Bitcoin whale, holding its assets for over 5 years, decided to offload a staggering 24,000 BTC, valued at approximately $2.59 billion. This massive transaction occurred on Sunday evening and led to a sharp decline in Bitcoin's price, pushing it below the $109,000 mark, levels not seen in more than 6 weeks. The immediate aftermath saw Bitcoin's price tumble by nearly 2.2% within a 9-minute window, before stabilizing around $109,000. This swift price action caught many traders employing leverage off guard, resulting in the liquidation of $284 million in long positions, according to data from CoinGlass. Despite the price dip, a notable trend emerged. The whale that divested from Bitcoin began a swift rotation into Ether, ETH, spot, and futures markets. This strategic move was observed on Hyperliquid, a decentralized exchange, and reflects a broader pattern of capital reallocation among significant market players, highlighting the growing momentum and perceived value in Ethereum. This rotation into ETH signals a potential shift in market leadership and investor preference, drawing attention to Ethereum's ecosystem and future prospects. While Bitcoin experienced a price correction, its futures market showed continued engagement. The open interest for Bitcoin futures climbed to an all-time high of 762,700 BTC, representing a 13% increase from 2 weeks prior. This suggests that traders remain actively involved in leveraged positions, potentially anticipating future price movements. However, a sustained break below the $110,000 level could trigger a cascade of liquidations, further increasing market volatility. In the options market, a bearish sentiment prevails, with put options trading at a 10% premium over call options for the 30-day delta skew, indicating a significant fear of further downside. On-chain data from Glassnode provides insight into holder behavior. The distribution patterns show that all wallet cohorts are currently in a sell mode. The 10-100 BTC holder group has been the most active in distributing assets. Meanwhile, the 101,000 BTC group appears to be consolidating around the $105,000 price point, which could serve as a crucial support level. In contrast, smaller holders, those with 0.1 BTC and 110 BTC, have been accumulating, especially after Bitcoin's price dipped below $107,000. This suggests that while short-term traders are exiting, long-term investors might be viewing the current price dip as a strategic accumulation opportunity. Ethereum, on the other hand, has seen a surge in investor demand. The whale involved in the massive Bitcoin transaction has been closing substantial Ether long positions, locking in profits while simultaneously acquiring more spot ETH, demonstrating strong conviction in its future performance. Chain reported that this whale profited $33 million from a $450 million ETH long position and continues to hold a significant ETH stake. While Ethereum also experienced a price correction, dipping below $4,400 from its record high of $4,954, it has notably outperformed Bitcoin over the past month, gaining nearly 25% compared to Bitcoin's 5.3% decline. This divergence in performance, coupled with consistent inflows into Ether ETFs versus outflows from Bitcoin ETFs, indicates a significant shift in investor sentiment and capital allocation, potentially signaling a new phase for the crypto market. These market movements paint a dynamic picture of the crypto world. And that wraps up our deep dive into today's top stories. All right, crypto enthusiasts, that's a wrap on today's rapid-fire updates. We saw Bitcoin dip below $110K, causing market-wide liquidations, while Ethereum surged, attracting capital as investors rotated from BTC. We also explored Bitcoin's volatility and strategic accumulation points, alongside a massive whale move shifting market power. Don't miss out on future insights. Smash that like button, subscribe to Bitcoin Bulletin for your daily crypto dose, ring the notification bell so you never miss an update, and let us know your thoughts in the comments below. For more, follow us on all our social media channels.